these videos every Tuesday, and it's a way for you guys to get more knowledge about the real estate market. I want to introduce, for those of you who are now coming on this video stream, I want to introduce our branch manager, Ken Chong from High Tech Lending. He is a lender, and he's going to be able to give us his side, or his thoughts on the lending side when you are purchasing a home. So we're gonna go ahead. Let's go ahead and start. You know, it's already 1:08, and
let's do this.
You know, let's hope this video stays on. Okay. So throughout our real estate career, we work with buyers and sellers, and you know, one of the things that as a real estate agent, when you're working with a realtor, hi Ellie, welcome back. One of the things that our job as a real estate agent, myself and my husband, we are real estate brokers, and we are the owners of Dominion Realty Group. And you know, one of the things that hi Karen, welcome. One of the things that we try to do is to make sure that we are streamlining the transaction where everything goes as smooth as possible. Now, myself and my husband, we are not lenders. We do work closely with other lenders, but your realtor should have an idea of, you know, what are some things you may want to avoid, okay, when you are looking to purchase a home. So we took the time to create a 10 commandments. Now, a lot of people could say, hey, there's a lot of things more things you can add on here on this list, these home buying 10 commandments. But these are kind of like the main things that you want to look out for, okay? So we're going to go ahead and jump right in. All right. So here are our 10 commandments for home buying. Okay. Commandment number 1, thou shalt not change jobs, become self-employed, or quit your job while you are in a contract with purchasing a home. So, Ken, your thoughts on that?
My thoughts on that is that's 110% true. Okay, so what happens is, from a lending standpoint, is if you change jobs, okay, we need to see at least 30 days worth of pay stubs for your new job.
Right. Okay,
so which in essence, you're going to delay your closing. And when delaying your closing, you have a certain contract date that you must close by, where, you know, Crystal can go into a little bit more details as far as if you don't close on time, you could maybe perhaps, you know, lose your deposit. You have to renegotiate like another closing date, where you may have to pay a penalty for the extension or whatnot. So it's very important that you do not change jobs during your during your process when you're in contract. Now, another thing is, if you change jobs from, let's say, a salary type of income to a commission income, in the lending guidelines, when you go commission, you have to have a 2-year history of it. So if that's the case, then you would not be able to qualify for a loan pretty much for another 2 years, which if you're in contract, that's just not good. Okay, and do not go self-employed. Self-employed is the same thing, where you have to have at least a 2-year history of being self-employed. Now, there's, you know, other specialty types of programs that you may qualify for if you do such a jump, where you don't have to wait the 2 years. However, the down payments and the interest rates are usually much higher.
That's so great. That's excellent information. And you mentioned about the self-employment.
Yes.
I'm pretty sure a lot of people aren't aware of that you can't just go from W-2 to self-employment. There is a bit of a waiting period.
Yes, that is correct. The waiting period is 2 years. We have to have at least a 2-year history of it, 2 years of tax returns, because the way lenders look at it is if you're self-employed, because most businesses go out of business within the first year. So they need to see a history of the self-employment and type of income that you're showing for those 2 years.
Right. And I just want to take a break. I thank you guys that just came on, John, JC, Denise, Veronica, Karen, and Ellie. Thanks, guys, for tuning in. I would also add, now guys, when you hear thou shalt not change jobs, it kind of sounds a bit of a no-brainer. Don't change your job if you're getting ready to buy a house, but we're talking about a situation where you are a buyer, you're about to buy a house, okay? And let's say you have a job right now and you're making, I don't know, $20 an hour, okay? And you get offered another position that's $30 an hour. What do you do? That's pretty tempting. Should I take the job? Should I? And and the answer is no, you wait. You wait until you close, that transaction, and
Sure.
then you can, hopefully they will hold the job for you. So, sometimes people get into pretty sticky situations where they have to really think about, wow, should I change my job or lose my house? And one of the things is, as your realtor, your realtor's job is to make sure that they are on top of all the deadlines of the transaction. So one of the things is also protecting your escrow deposit. So if God forbid, if something happens, then you could possibly lose your deposit based upon changing a job. So it's something to really think about and talk to your lender to get more details on that. Okay, we're going to jump to number 2. Thank you for that. It was really great information. Okay, home buying, 10 commandment, number 2. Thou shalt not buy a car, truck, or van. Okay.
Definitely true. Okay. Because what happens is when you come to a lender, okay, to get pre-approved for a mortgage, your mortgage is approved based on how much money you make and the type of debt you have on your credit. So, if your debt all of a sudden goes up, your debt to income ratios could go up as well. So depending on what debt to income ratio you're at, and for the loan amount that you're looking for, by buying a new car, that could definitely change, and you may be approved for, let's just say, for example, 300,000. Now you may not be. Now you may only be approved for 280,000, which is a big difference on the 20,000 for the house you're trying to buy. And also, when you also do that, you're also running your credit again. So it could lower your credit score. So depending on where your credit score is as well, you can move to a lower tier, which could increase your interest rate. Because just keep in mind, when getting a mortgage, your interest rate is credit score driven. So you want to try to have the best credit possible when applying for a mortgage.
And guys, we all know those dealerships, they don't just run your credit once.
For whatever reason, they run it a few
They're
million
shopping
times.
you
Yes.
to all these different lenders, and every time that credit, is run, your credit score is going to be affected. So that's something to really be very mindful of when you are, shopping for, a car. Do that after you buy the house, okay? Yes. You go hold on, until you buy that BMW or Mercedes, whatever you're interested in. Hold off until you get the keys to your house, and then you can do whatever you want after that.
Just keep in mind, one thing to keep in mind when getting a mortgage, lenders just love stability. Yeah. You got too many things going on, it makes a lender nervous. So, the best way to do it, try not to do too much. Once you get the house, then, you can think about the new car, the new job, try to stay as stable as possible.
All right, so we're going to go to number 3. Thou shalt not use credit cards excessively or let current accounts fall behind.
Yes, again, that kind of goes with the debt to income ratios,
right.
What you were pre-approved for. If anything, maybe work on paying down your credit cards from the time you're pre-approved, because depending on how long it takes for you to purchase a home or find the property that you're looking to buy, a lender may have to rerun your credit. So if you raise your credit card limits, your credit score can, one, go down and raise your debt to income ratios. So if you're also, but on the flip side, if you're paying down your credit cards, if we rerun your credit, your score may go up, which is in return is going to get you a better interest rate. So definitely be mindful of that, and hopefully you won't have to put too much on credit, keep things stable. If anything, pay them down, and your lender can get you the best interest rate available out there.
All right. Number 4, this is a big one. Okay, you guys ready? Thou shalt not spend money you have set aside for closing. And, I think this one here is pretty huge. I would like to definitely talk more about in terms of money cash that you also may have, in your safe deposit box, in your sock drawer, whatever the case may be. And how important is that to have those funds in the bank?
Sure, absolutely. Now, just so you guys know, when it comes to your funds for closing, lenders do not accept cash. You cannot, I know some parents or grandparents, they're a little old school. They like to keep the cash under the mattress. Unfortunately, in the lending world, that's not allowed. You need the money in the bank and seasoned for at least 60 days, meaning two bank statements is what we require. And money that's not sourceable, unfortunately, we cannot account for is your funds to close um, due to the U.S. Patriot Act.
Right. And that law actually made a lot of changes, and the whole purpose of this is because of money laundering. So
Correct.
they're trying to avoid any issues with money laundering. So they know that where those funds are coming from. So let me give you an example. Let's just say you have $10,000 under your mattress, okay, and you want to buy a home. You may want to put that money in the bank as soon as possible so that the lender can source that for the last 60 months. Because what happens is the lender they just look at it as it's not there. It's almost like it's not there. It's almost like you don't have the 10,000. So if you guys have cash right now and you're looking to buy a home within the next few months to a year, put that money in the bank now. Go after this call, go to the bank and go put your money in there because you're gonna need the lender's gonna have to source it. Okay, so that's your homework for today. Put your money in the bank.
Keep it in the bank.
Yeah,
Don't
keep
take
it
it out.
in there. Right, right. You wouldn't want something like that to hold up your closing. Okay. All right, number 5. This one is kind of interesting. It says, "Thou shalt not omit debts or liability from your loan applications." So you have to be very honest when you're talking to a lender.
Correct.
Right.
Like, for example, something that comes up a lot is, let's just say if the borrower has child support and
That's a
they don't
big
tell the
one.
lender.
Yeah.
And, what happens is, in some cases where the borrower has the child support automatically deducted from their paycheck. So what's going to happen is when the paycheck comes in, it goes to underwriting, they're going to see the auto debit for the child support because you did not disclose that. Let's just say the child support's $500 a month. So they're going to look at that as an extra $500 a month of debt, which is going to raise your debt to income ratios, which, depending on your loan amount, your loan may or may not get approved, or you may not be able to get as high of a loan amount as you initially anticipated. Right. So it's very important if there's any debts that's not on your credit report, let your lender know so they can calculate your pre-approval properly.
That's great. Okay, and number 6, this one, guys, "Thou shalt not buy furniture while you're on the contract." And this goes along the lines
Right.
with adding debt while you are on the contract.
Correct. That goes along with some lenders. They may rerun credit just to double check your debt to income ratios before closing.
Right.
And if that happens, you may be approved with a loan commitment, but once your debt goes up past a tolerable amount, then, unfortunately, your loan could get denied based on that.
Right, and you don't want to be, 30 days, you're getting ready to close on your house and you went into Rooms to Go and bought a big furniture set and, oh my gosh, I can't close because that furniture that you added on your debt, it put you above that threshold, so your loan is denied, and guess what? You can't close. So that would be horrible. You're buying a buying furniture for the house that you're gonna move in, and you can't even buy the house.
Yep.
Oh my gosh, that's horrible. So yeah, guys, so hold off on that bedroom set until after closing.
Remember, guys, stability. Lenders like stability.
Right. Okay, and then this one here, it's kind of closely to what I just mentioned earlier. Thou shalt not make large deposits without checking with the loan officer.
Correct. Because what happens is once your loan goes into underwriting, okay, the underwriter is going to evaluate your bank statements that you've submitted for the last 2 months. And if there's any big deposits in there that's not auto debit or a transfer, they're going to ask what it's for.
Right.
So if you cannot source what that money is other than cash, unfortunately, they're going to back out the amount that was deposited. So for example, if you have $10,000 in a bank and there was like a $3,000 deposit, which was cash, so we would back out that $3,000 cash deposit. So you're only going to get credit for $7,000 in that bank
almost
account.
like you only have 7,000,
Correct.
even though you have 10. That's insane.
Correct. You just cannot use that money, unfortunately, for closing, which, depending on how much money you need to close, could make or break your loan as well.
Yeah. Yeah. Okay. And then number 8. Okay, thou shalt not originate any inquiries into your credit.
Correct, because if you have too many inquiries, what happens is part of the loan process, the lender may want you to address each inquiry if there was like any new debt that was occurred as of the inquiry. So, definitely better just to stay away from extra inquiries. That's not necessary.
Right. This is a big one, guys. This is number 9. Thou shalt not change bank accounts.
Yes.
Whew.
It kind of goes along with some of the things we discussed. Any assets that you're going to be using for closing, we have to source where it comes from. When you start changing bank accounts, then we're going to need extra paperwork, which you're going to probably get stressed out. You're going to stress out the loan officer because they have, they're scrambling to get your loan docs to underwriting so this way you can close on time. So definitely don't change bank accounts during the process, because then you're going to have extra paperwork that the bank's going to require to source where the money went from account A to account B.
And I would even add to anytime there's more paperwork involved, because as a real estate broker on our side, a lot of times our buyers, they tell us, man, it's so much paperwork, and sometimes it's a very frustrating because all this documents that you have to submit. And, if you have to submit more documents, that it gets even more frustrating.
Absolutely.
So to avoid having to submit the large amount of documents, it just makes the transaction as, more smooth. So that's really important, to make sure that you're listening to your lender and you're providing them all the documents that they need. So that's a great one. And this is the last one. This is 10 Commandment number 10, okay? Thou shalt not co-sign a loan for anyone while you are under contract to purchase a home.
Well, I mean, it's just natural sometimes just want to help out a family member, brother, sister, mother, father, cousin, or whatnot. But what happens is when you co-sign a loan for anybody, it's extra debt that you're incurring into your personal debt. So even though you're not paying it, all you're doing is co-signing. From a lending standpoint, we're going to look at that as extra debt that's going to get counted against you, which is going to increase your debt to income ratios. Now, however, there are some exceptions to that. Let's just say if you co-sign a car for someone, just make sure you are not the primary borrower. Okay, as long as you're the co-signer and you can show that for the last 12 months that the primary borrower has been making the payments on that car, then we don't have to count that against you. So, however, if you just all of a sudden co-sign, then you're not going to have the 12 months that's needed to not count the payment against you. So it's very important that he is 12 months and you have to be the co-signer, not the primary.
And that what you just said there, Ken, is it's so amazing to. That's why it's important to work with a lender that knows what they're doing.
Absolutely.
Because just that information, you said, yeah, if you are co-signing, however, that person needs to show proof that they are the primary buyer, then you would be okay. So these are all these, there's always conditions, there's always ways around things, but of course, the best way is to be as clean as possible. Try your best. However, if they're, for example, if you are co-signing a loan, if you, then talk to your lender. Ken Chong, he's an excellent lender. We've been working with him for many, many years.
Been doing it for 18 years.
And
lots of knowledge.
Yeah, and he'll be able to assist you with that. So that's it for our 10 commandments. Woo, that was really very interesting. I want to open up for questions, guys. I want to thank you guys so much for being online today. And we actually got our first question online. We had our request that someone wanted me to answer some questions about a particular thing. So while you guys are asking your questions, I'm going to go ahead and address this question that I got offline. Okay. So here is the question. All right. So this question is based on home buying as well, okay? It's just a little bit different. So the question that they had was, could you talk about, for when buying a new construction home, what upgrades are worth it and what questions are important? So basically, if you are a buyer and you are looking for a new construction home, or a new build, there's so many ways you can call it, but a new home. No one's never lived there before. That's the best way to put it. And what are those questions that you need to ask? Okay, so I put together 5 things that I think that would be the most important things you want to ask, and also some suggestions. Okay, so number 1, you want to make sure you ask the developer or whoever you're speaking to there if they are, hi Valerie, Valerie just jumped on, if there are any what you call CDDs. And CDDs are basically an assessment that the developer would sometimes assess to your taxes, okay? And these assessments could be for anything. It could be to build the clubhouse that is in the community. It could be for anything in the community. And instead of paying off that whole thing, it's added on to the buyer and it's added on to your taxes at the end of the year. And a lot of times these CDDs are attached to the property for 20, 30 years. So you could be paying for the CDD for many, many, many years. If this is something that you don't want to be paying, then you definitely may not want to purchase in that new construction. Now, not all new constructions have CDDs, so you definitely just want to ask them that question to make sure that you know what you're getting yourself into. And then number 2, definitely, now this is a tip. So the tip I always recommend when you're buying a new construction home is to get a home inspection, right? But get the home inspection before they put the drywall up, okay? Now, once they put the drywall up, everything is going to be covered, the electrical, the plumbing, everything. So the inspector really won't be able to see what's really going on inside the shell of that home. If you get the inspection after the home, it's great and all, but let's be frank, a new construction, usually the outside of it, you're not really going to see what's really going on the inside. Absolutely. So when you get a home inspection, try to get it done before they put the drywall up, okay? Because the drywall is going to cover everything and you really won't be able to see anything.
That's a great point.
Right. Number 4, so she talked about upgrades and she wanted to know what upgrades that she thinks would be most important. So Ken and I actually talked about this, and we actually both agreed on this topic. And we thought definitely the flooring and kitchen cabinets. Those 2 things were the most important upgrades to do before you even move into the home. And
that's the thing you're going to see most. As soon as you walk in the house, you see the flooring, and then you get the kitchen that sticks out. There's a lot of little things that you can pay extra money on. May not be worth it because you don't really see it. So I think from a resale purpose, I think flooring and kitchens probably may be the 2 most important things.
Right. And also, when you purchase a new construction home, you want to be able to just move in. You don't want to have to deal with, ripping up flooring and,
Yeah.
doing all that stuff. It would be great to get that done as soon, before you move in. And another thing, I know some people, sometimes they purchase a new construction home with just the carpet, and
Mhm.
then sometimes they would rip up the floor after. That's something that sometimes
Sure.
people do, but it's an added expense you would
Yeah.
have to do after. Now, if you have someone that is great and maybe, I don't know, an uncle has a construction company and they're giving you a great deal, then so be it. Go ahead and do that. But essentially, your flooring and your kitchen cabinets will be great to have that done before you actually move in the property. Okay. And then number five, this is the most important one, guys. Okay. Always use a buyer agent when you are looking at new construction homes. Even when you are window shopping, let's say you and your family are traveling and you see a new construction community. Before you go inside, call your agent, call your realtor. Hopefully you're gonna call me. And then I will meet you there so I can do the introduction and help you through the purchasing process. Because what happens is when you walk in by yourself, you're literally walking in blindfolded, okay? You may not know the questions to ask, like some of these things that we're talking about. You may not be represented the best way because essentially the agent that is there, if you go in, then you'll be represented by that agent, and that agent essentially is representing
The seller.
the seller. So who would you want representing you? You would want a buyer agent representing you versus the builder seller. So and a lot of builders, just a little tip, they will not allow you to use a buyer agent unless you went in with the buyer agent the first time, the first visit. So make sure, guys, don't just walk in, call your agent, tell them, hey, I want to see this property, and schedule that appointment to see it. If because it's really important that you're not walking in there just kind of blindsided and have no idea what to ask, and it just makes the process so much easier. There's some things on there also when you're buying a new construction. A lot of times there you have to put down an escrow deposit. Okay, you know how is your escrow deposit safe? Okay, there's a lot of things in there that could make or break your experience. So having an agent there that's going to walk you through the process step by step is super, super important. So that's one thing I highly, highly recommend, guys. So if any of you guys are looking for new construction, feel free to reach out to me. So that was it. That was pretty much it for our new construction questions. So we're going to go ahead and open up. Thank you guys so much
Yeah,
for
thank you so much.
coming here and listening to the 10 home buying commandments. And we're going to go ahead and open up for questions. You guys have any questions? We will go ahead and answer any of those questions that you guys have. And while we're waiting, I would love to give you an opportunity to give all our viewers your contact information if anyone is interested in purchasing a home. And how can they reach you?
Yeah, well, one, you can either just message this link, and then we can respond with the contact information. So this way you have it. Or you can always send me an email. My email is kchong at hightechlending.com, which is spelled HIGHTECHLENDING.com. Respond to your email as quick as possible. And, feel free to reach out to me with just any general questions about lending. I'm here to help, to try to, educate you guys the best possible. And hopefully you guys will be buying your home soon. And Crystal and I, we work together on many deals, and we would love to help you guys out there. And, one thing I can promise you, we'll make this transaction as smooth as possible, and keep your stress level to a minimal. Because I know buying this a new home can be very stressful sometimes. If you don't have the right team that's representing you, both on the lending side and the real estate side. So it's extremely important. feel free to contact us for, a consultation. We'd love to sit down with you one-on-one, answer any questions, go over, different scenarios. So this way, we can educate you even on a one-on-one basis to, so this way, exactly what you're getting yourself into.
Great. Okay, guys. So it looks like we don't have any, I don't know, the connection is a little slow today. So I don't know if you guys have questions, but if you do have questions, you can still comment on the link even once we get off of the line. And I just want to thank you guys so much for tuning in today. It's been a really amazing time. We learned so much today about home buying and what you should do and what you should not do to make your home buying as smooth as possible. So tune in next week, Tuesday. We are going to have another My Realtor Tips, and we're so excited to see you next Tuesday. Okay, guys, have a fantastic day. Take care.
Take care.
Bye now.